Hello, everyone. Welcome to another wonderful day over here with us at the SBDC and with Lori Williams. I'm going to tell you a little bit about the SBDC in case this is your first time with us. The SBDC is a national program with over 1,000 locations across the country, helping to stimulate economic growth through business advising and development. We offer no-cost services to the local businesses through funding provided by the U.S. Small Business Administration, SBA, and from the California Governor's Office of Business and Economic Development, GoBiz. The Los Angeles Regional Small Business Development Center network serves small businesses throughout Los Angeles, Santa Barbara, and Ventura counties. We offer no-cost business advising, meaning you can meet one-on-one via phone or Zoom to address your specific needs and challenges. And we also offer virtual training as this amazing workshop to help and adapt and grow your business. So on that note, Lori, hello, how are you?
Hello, Sadie, and hello, everybody. Welcome to the show. We got another exciting one going. I wanted to mention we have someone that I'm gonna introduce in a bit, but there's gonna possibly be more questions that you may want to ask today. So if you have a question, try to get it in the question box, not the chat. Sadie's gonna monitor if you accidentally put it in the chat. She's gonna move it down to the question box, but I want to make sure I can see it so I can get any of your questions answered. Also, while I'm on the chat, the Zoom is now doing this thing where the drop down will automatically go to host and panelist. And so a lot of times I see you guys making wonderful comments for everybody, and I'm the only one that sees it. So when you are going into the party, which is our chat, make sure you hit to everyone so everyone sees your wonderful hello messages that I love that you guys always do. So that's some quick comments on it. Okay, let's get started today. So first of all, and Sadie's going to put all this information in. Can you believe July's around the corner? And I know for you guys with kids are on vacation. You're already counting the days, right? You're going, when do they go back to school? I know that, right? You're in the midst of summer. But I'm starting my July series. I'm going to do the legal structure for your company, tax advantages. I always like to say, if you think you're going to form an LLC so you can be taxed different than a sole prop, click on that link and get in there. You need to understand some things. I also go into how companies are taxed. What is the advantage of an S Corp? Another misnomer that people don't understand. So jump on that webinar, as well as my financial series. I just finished it for June. Oops, I got the wrong date on the last one, I see, but Sadie's got the correct information. Look in the chat. I'm wrong on my slide. She's
Well, you
right.
know what I'm going to tell you, Lori? I have the date of June 16th too.
Oh, well, I got to fix that. Well, session 3 isn't starting yet. I'll fix that later.
Okay.
Okay. I'll fix that later. I just scheduled the July, and you know what? I'm a little bit behind on things. So, yeah, we're doing things on the fly a little bit. But sign up for 1 and 2, and then you got to watch the show so you can get the right link for 3. How's that? Did you like that, Sadie? How I pulled that one off?
Hi-ho.
Okay. Sadie's putting this information in the chat right now. Last week, I started bringing up a couple things. I was talking about the EIDL loan. I was talking about the LLC franchise tax fee, and I got a ton of questions about the franchise tax fee. And I realized I need to back up, give you guys some more information because this is a confusing topic. So I decided today's talk is just going to be about the franchise tax fee. So if you're an LLC, pay attention. If you're a sole prop, you don't get to have to pay attention to this. You don't know this. Now, this is the way it works, guys. The $800 franchise tax fee is a minimum amount that must be paid every single year by an LLC. So the full language is that you have until the 15th day right here of the 4th month from the date you file with this is the Secretary of State to pay your first annual fee. So let's say I register in July. I have 4 months, in the 4th month, the 15th day to pay. Now, the subsequent years is the 4th month, the 15th day. And what day is that? April 15th. That's on your regular taxes are due. Your IRS, your state taxes are due on that day. So after you are registered for the first year and you pay the first year, then every other year, every year from that point on, you are always paying on the same day that you pay your regular taxes, April 15th. Okay. So sometimes people, what they think is, well, if I am registering in the year and I'm in the middle of the year, I get a prorated amount. No, you have to pay the whole amount. Another thing that people believe is I pay it after the year. No, you're paying it up front. That's why you're paying April 15th for the year. You're not paying at the end of the year, you're paying at the beginning. Now, here's where it's gotten really confusing. During COVID, during COVID, there was, I'm using the word was, an exception that the first year it was not due. They did this to try to get people to open up companies during COVID, okay? So from January 1st, right here you see it, from January 1st, 2021 to before January 1st, 2024, you were not required to pay the $800 for the first year, but then you would be paying it afterwards. Several things have come out of some confusion. I have people that have started LLCs that weren't even aware of the $800, number one. And then I had people, and I even had some advisors tell people that, well, the first year you don't have to pay. Like, this is a thing. Like, you started an LLC and the first year you don't pay, which is not true. Okay. So make sure you're aware of this, because if you do not pay this, they suspend the company, then it's technically illegal for you to do business and you have to pay the penalties and fees before you can get it up again. Now, I didn't put it on my slide, but Sadie just put in for me, and this is my writing. I put to check on your status, search lookup. You click on that, and it takes you to the registration page, and you click on business search. If you put in the exact name that you used when registering, or your corporate ID number, which starts with a 2, it's 202 something, you can pull up the records on the internal database of the government and check the status, and you will see that it'll say in good standing. If you see it suspended, that's a concern. Now, let me tell you the behind the scenes. We're being recorded here, but I didn't tell you that. I've just noticed this. This is just Lori noticing that the franchise tax board has been a little bit behind in catching people that didn't pay the 800. And if you mail it in right away, you may get under the radar and you might be able to correct it if you are behind on payment. So if you did not pay this, make sure you, approach it very quickly and try to get it paid so you don't get suspended. So I just wanted to bring that up one more time. If you get any questions, you need to reach me. You've got my email in there. Ask a question in the question box. I just want to make sure everybody fully understands how that works. Okay, upcoming shows. Next week, we got Capilla. I'm not going to say his last name. I probably said his first name wrong, but I'm calling him a serial entrepreneur because that's really what he's been. And he's just fascinating. He was born in New Zealand, came to America, started many different companies, and got engaged in all different things from exports to purchases to products. And he's just a wealth of experiences and information. And I asked him to come on the show to just kind of talk about different things. I think there's so much we can learn from him. So I'm excited to interview him next week. July 3rd is obviously a holiday week, and I almost thought about not having a show that week. But then, if Sadie and I were talking and said a lot of people, they're going to take off at the end of the day. People that love the show, they're always here. So I decided what we're going to do is we're going to have a special show, guys. We're going to have a Ask Lori Anything. Okay. You can ask me anything, in the usual finance, tax, and accounting and all that you do. But you can also ask me just as much. As I was telling Sadie before the show, I go, I put people on the show and I put them on the spot. I ask them all these questions. You see it all the time. That's what you love about it. So what was your beginning? What was your thought? How did that work out? You get to ask me anything. I'll answer anything you ask. Okay. So you can either send a question in ahead of time. You can send it to me if it's something that I need to look into, or what is going to happen is I'm going to be looking at the question box and I don't know what the show is going to be about. You are going to be the host and I am going to be the guest. Okay. So it should be a lot of fun. And then on July 10th, I've got David Horowitz coming back on. For those of you who are frequent flyers, he's going to talk once again about investment vehicles for retirement for small companies. And, I know, and I tell David all the time, I know that, everybody's like, I can barely, make some money to pay the bills. How can I look at retirement? But there's still things you can do where you can put little bits away. You can have some tax advantages to it. So it's a good thing to kind of understand what options are out there. And a lot has changed over the years, like the individual 401k. That's a unique thing for companies that wasn't in existence before. So he's going to unpack all that and kind of say, what can you do to just start putting a little bit away? Because you know what Ben Franklin said, and I'm not going to get the right words, but somebody in the audience may know exactly how it is. But, the Ben Franklin compound interest, you put $1 away and it earns money over time periods. And I've been self-employed my whole life. I don't have a pension or any of that, but I put little bits away, a little bits away, a little bits away, and it really does add up. And then it gets to a point where you do want to have these advantages, which give you a tax write-off. Okay, enough about that. Let's get into the fun today. I was so excited to have Clarissa Wilson back on. She's been on several times for those of you who are familiar with the show. She is the owner of Nerdy Number Lovers LLC. Nerdy Number Lovers is an accounting firm that works with small online businesses to make the accounting and bookkeeping as easy as possible. I know you guys like that concept because bookkeeping, many of you do not feel as easy. Clarissa works with her clients to make sure their accounting is done correctly. Key point here, and the owners understand the numbers. Another big key point. I've asked her to come on the show and share with us some best practices. I love having Clarissa on, and I always say this, I'm a little biased on Clarissa. I don't have too many bookkeepers come on because for most part, I don't find people that have a strong background and actually understand bookkeeping versus just the software. So Clarissa, I'm going to start with that. You know exactly what I just said. Let's go into your background and why what I said is so important.
So my background starts with I have 3 college degrees in accounting. 2 are masters in forensic accounting, which is fraud. So I love digging into the numbers basically. And I think that's how the bookkeeping actually just became so easy for me. Besides the fact that I was also a government tax auditor for 6 years. So I was in the numbers for hundreds of businesses. Um, so just being in the numbers and then making sure that what you're actually looking at when you look at your financial statements is correct. Because when you look at your financial statements, that's how you make decisions in your business. Well, it should be. I know a lot of business owners don't actually do this because their financial statements aren't correct or they don't know how to read them.
Now, Clarissa, if I have a bookkeeper and they're doing my financials and it goes to the accountant and I make a mistake on my taxes, it's their fault, not mine, right? I don't have to worry, right? Yeah.
No,
I have people think that all the time. Can you clarify that, please?
sure. And I even have a client right now who her tax return was filed incorrectly in 2021 or 2022. I wasn't doing her bookkeeping at the time. She had actually hired QuickBooks Live to do her bookkeeping. And on this tax return, there is $34,000 in some kind of asset for buildings and equipment. This person has no buildings and equipment at all in her business. She sells a physical inventory that is actually in a warehouse somewhere else and they fulfill all the orders for her. So there is no buildings or property or anything like that in her business. And she's asking me how this can be. I'm like, that is where it comes into hiring the right people in the beginning to know what you're looking at with your numbers. Because if your numbers are done wrong, your tax return is done wrong, and then you finally find someone who can do it correctly, and then you get asked questions about why are these numbers like that on prior years when they shouldn't be because
Right.
somebody did it incorrectly.
I know, and I run into that when I'm looking at people's numbers. I will see that it was done incorrectly, and you run into a dilemma because then when you do the tax return, you're going to put the truth. Obviously, you have to, but then it becomes a question, and you don't want to amend all the tax. I mean, it
Mhm.
becomes a sticky situation. That's all I'm trying to say. It becomes
Yep.
a very sticky situation. And I run into it all the time where then the banks want to look at something and they're comparing, obviously, of course, the tax returns. So when the tax return previously says something and then it disappears because it's correct, it becomes suspect as
Yep.
well. So I
Yep.
just said a lot that some may follow and some may not. And I want to unpack this. So we're going to back up a little bit and we're going to get into the detail. I'm going to go in two ways. I'm going to start first with something you mentioned, the QuickBook Expert Live. Now, most people, what they think, Clarice, is they go, well, QuickBooks, it's the main software. It's an Expert Live. This has to be the perfect person. You get this sense of security. So let's walk through what the difference between a bookkeeper I call him a technology person. That's Lori's way of looking at it, and a
Mhm.
bookkeeper that is an accounting person. And I'm starting to believe it's my own, you give me your opinion, but I'm starting to think of the majority of the bookkeepers out there are really technology people, not bookkeepers. So
Mhm.
unpack that for our audience.
So either they're technology people where they just work for something like QuickBooks, because QuickBooks puts ads out there all the time, especially on Indeed, because I know I've applied for them. I've actually been declined, if that makes sense. Um, but they put ads out there for because bookkeeping is one of those jobs where it's a perfect work from home job, but
Right.
it's not, because if you do bookkeeping and you don't have the accounting knowledge, you're not doing the bookkeeping correctly, because there's a lot more than just revenue and expenses that go into your bookkeeping. And that's where most people don't get it. Because one of the biggest things that I see, and I'm sure you see it too, is credit card payments are going on the profit and loss statement. And they shouldn't be, because then you're reporting that expense twice when you
Yeah.
put the credit card payments on the profit and loss. Same with loan payments. Those don't go on your profit and loss statement either. I keep wanting to say balance sheet because that's where they go.
Yeah, I know. And you're so correct on that. And so what we're saying here, guys, is the interest that you're paying on a loan that can go on the profit and loss as a deduction. But if you think about it, I borrowed money, I'm paying the money back. How is that a deduction? You're borrowing money. You're not, it's not a
Right.
deduction. The interest is additional money, and that's a business expense. But like you're saying, I see people put the whole loan payment and then they look at that as a deduction. And when we talk about this, you have to remember that incorrect deduction is lowering net income, which is lowering your taxable income, which is an IRS issue. Then you didn't
Yep.
pay the amount.
Yep.
And the same with credit card. I even seen, believe it or not, people have a category on their profit and loss called credit card. And they put the payment, and I explain that a credit card is a payment method, like a check's a payment method. A credit card is a payment method. It's not a deduction. There's no such thing as I deduct advertising, rent, and credit card. You have to
Mhm.
identify what it is. And so you can tell people don't know what they're doing when you see these. So in that, let's walk through in the mechanics of where these mistakes come from. And I just heard, it was an accountant that actually said this, and I loved it. They said, automation needs supervision.
Yes.
And I love that because that is such a wonderful way. So walk us through when I hear from QuickBooks. I'm mostly picking on QuickBooks because the one that says it. All you got to do is sync your data with the QuickBooks and the credit card and the bank statement, and you can go, accounting is done. Why is that not true?
Well, let's start with AI. So first of all, QuickBooks is trying to develop their AI even more. And yes, their AI can read what you're pulling into QuickBooks, but it's not always reading it correctly. I have one example that I use all the time. I have a client who makes money from Amazon. This money comes into their account. QuickBooks reads this as an expense, but it's income every single time QuickBooks does this. So if they were to let QuickBooks do it on their own, then they're putting a negative expense on their profit and loss statement when it's actually income and it's not an expense at all. So their AI is not reading everything correctly. So you can let their AI read it, but you do not want it to sort automatically. You want to go through every single transaction and be able to hit that add button yourself, because things are going to be categorized incorrectly. And then to find that, you have to go line by line through everything on your general ledger to figure out what's correct and what's incorrect.
Now, this is the perfect spot that we are going to unpack this, because this is the key part. And I want to make sure I unpack it so well that every single person on this call that's using QuickBooks understands what I'm talking about. So I'm going to start with just another example of something that I saw on the revenue side. During the pandemic, when people were getting money in, like a grant or the PPP, QuickBooks is picking it up as revenue, not that it's a grant, putting it as revenue, increasing their revenue, and they're paying taxes
Yep.
on the grant money or the loans they took out. And it's because it's just saying, okay, it's a deposit, it must be revenue, or it's a expense like Amazon, it must be an expense. Now, when you talked about adding it yourself, I want to unpack that and go into the logistics of that, Clarissa. You're talking about going into QuickBooks and turning off some choices within the software and then physically doing it instead. Can we go into details with that so everybody in the audience understands what we're talking about?
So what you're doing in QuickBooks is you're setting a rule, and so that when a specific transaction comes through, so we'll go back to Amazon here. So you're setting a rule so that when a specific transaction, so it comes from Amazon, it goes into a specific account. So for most people, you're buying something from Amazon and it's going to be classified as office expenses because it's usually going to be something like an office supply or something like that. But you want to make sure that auto add is toggled off. QuickBooks automatically has this toggled on. And this is where, when you have this rule set, anytime this transaction comes through, if it's toggled on for the auto add, then you're not even going to see this in your transaction list. It's automatically just going to go to that account, whether it's correct or not. So if you turn off that auto add, everything will still show up in your transaction list in QuickBooks so that you can go through line by line every transaction that went through your bank account and make sure that it's in the actual correct account.
Perfect. So Sadie put auto add turn off in the chat so people understand that. Now, when we talk about that, what I like explaining it is you are still using the advantage of having the data entry. In other words, you're not entering the data. But as you know from doing fraud, when you are checking things, there's a different ability or sense of noticing depending on how you check. Like if you're checking something that's already been done, you don't notice things as well. If you're checking something as you're doing it, you notice it better. And that's why I think this is so important, because for the non-accounting person that's doing their own QuickBooks, for them to try to go through the ledgers and detect a mistake is almost impossible for them. But if they're sitting there and the data is entered, but they can say, yes, Amazon isn't an expense, it's an office supply. Yes, this is a payment from client. You have a better possibility of accuracy. Would I be correct in what I'm saying? You want to add anything on that?
Yes, that is 100% correct. And I have 30 plus clients, and I do this every single day where I make sure that I go through and I hit add on everything and turn off all of those rules. Now, I will say that QuickBooks likes to be a pain, and they will go through and they will automatically turn on some of your rules. This has happened to me several times this year. So if you know that certain transactions are coming through your business and you don't actually see them in your bank feed, go to the rules tab and check and see if the auto ad was turned on, and then go through and turn it off. And this is just QuickBooks being QuickBooks. It's not even something you can prevent.
Beautiful information. Okay, so now let's go to if you hired somebody. And I'm going to go here and then I'm going to back up. So I'm going to go here and back up. If you hire somebody, and you tell me if I'm correct or if I'm being a little bit of a jerk here, but if I hired somebody, I would want to say, are you checking each of these transactions, or are you using auto add? Because Clarissa, I think a lot of these bookkeepers, and I may be wrong, but I'm just looking at the reports and that's why I'm saying this. I think they're using auto add. They're doing a bunch of clients because they're not really doing anything. They're not participating in a supervising the automation. Your thoughts?
They're either using auto add or they are just leaving whatever QuickBooks AI suggests for the account that it should go in. And if you are to look at your financial statements after you hire someone and you see uncategorized asset, uncategorized revenue, uncategorized expense, ask client, ask my accountant, any of those accounts, then they are not doing their job correctly. Because you should never see those accounts unless they literally have to ask you what they are, then they should be asking you.
Right. That's hilarious because my next thing I was going to say to you, my very next thing I was going to say, I cannot stand when I see ask my accountant. When I see ask my accountant on a financial statement, I already know somebody is not doing their job and I don't trust the financials the minute I see that. Because you're right, you shouldn't have to use it. You should write a note, you should call, you should text, you should email your client and ask them. And so ask your accountant is a very clue into that. So let's go up the food chain a little bit. Now let's be interviewing a bookkeeper. Let's interview one. Now we talked about the asking about the auto ad, and I wanted to stay there because we were right on that topic. I wanted to keep it, on point. But now I want to go back up and I want to say, I'm interviewing a bookkeeper. Here's what I hear people ask all the time. So how much do you charge? Okay, that's an important question. I'm not saying it doesn't matter, but that to me is not the first important question. I always got to stop doing that. When I do that, it makes those gestures. I got to stop. I got to get my hands to stop doing that. So if you were to pick a few questions to get out from this person who's trying to sell you bookkeeping to figure out if they're a technology bookkeeper or an accounting bookkeeper, what would you do in the interview process? And Sadie, capture any of these things you can as she's saying them.
The first question would be, tell me about your experience. It doesn't have to be education, but you could also ask about education, but their experience with doing any type of bookkeeping, accounting work is very important, because if they have not done any type of accounting work, whether it's for another specific, like one specific company where they were, say, the in-house bookkeeper, then they don't have, for the most part, the right experience that you're looking for.
That's I want to really point that out what you just said. If somebody's been an internal bookkeeper and they learned within one company, they learn the ins and outs of that company. They may even been taught by their accountant to do it this way. That doesn't mean that they have the knowledge to apply it in other companies. That's key. I just wanted to make sure I really played up what you said because it was so important. Please continue.
You can also ask about their education. So what type of education do they have? At a minimum, I would say you want an associate degree in accounting. They don't have to have a bachelor's degree. They don't have to have the master's degrees like I have. An associate degree will at least get them the basic accounting education, whereas most of the people that are taking a course, say like bookkeeper launch, there is no education in that. It is literally just a course telling you how to be a bookkeeper and how to go out and get clients to fill up their roster. That is all that course is. So experience, education, And then another question that I actually wish people would ask is, how many clients do you have? And do you have the ability to take another client right now?
Yeah. That beautiful question. Beautiful. That is really important because sometimes then they get lazy. They're doing the auto because they're just trying to, kind of herd cattle. They're just kind of,
Yep.
herding them through. That is so true. That is so true. Now,
Yep.
Kim asked a question, and I differ on this. Everybody has a different opinion on this. It's an excellent question to ask. Is industry specific knowledge important? And I know that a lot of times people believe it is, even for a tax person. And like I said, you very much may differ on that. But I think that if you have something that's a really weird industry, like, there's depletion in the gas pipeline industries that got these weird friggin' laws that you really want somebody in that area. But when we are in the small businesses, if you have somebody that at least understands accounting, bookkeeping, and business taxes, they should be able to apply whether you're an online business doing widgets, or you're an online business using services, or your product business. So I feel as though it's so hard to find somebody that knows what they're doing. If you try to find somebody that knows what you're doing and then industry specific in our arena, unless you're doing something so weird, which mostly isn't in the small businesses, industry specific isn't as important. But you may totally say different than what I said, and please do, but that's my opinion. So give your opinion on it.
I honestly do believe industry specific is important because there are people out there who know absolutely nothing about physical inventory.
Uh,
And the reason I know about physical inventory is because I did several audits on doing this. I do not have physical inventory in my business, so it's normally something I wouldn't know. But because I did several audits on it before I became full-time in my business, I do know physical inventory. Or I actually refuse to work with real estate. I do not like doing real estate businesses. So that's one where I will turn them down, because there is a little bit of a difference with real estate than there is with everything else. Again, because we go into that depreciation, depletion, that type of stuff. It's just something that I'm not interested in doing. So you may find bookkeepers out there who will be more specific like I am and not work with certain industries. But if you have a physical inventory business, yes, it is very important that your bookkeeper knows how to handle physical inventory and cost of goods sold. Because Lori and I have this conversation a lot, where one of my clients who was friends with Lori, she has physical inventory. She does not know her cost of goods sold for her business. And I have tried to get this information from her, but she doesn't seem to really care about this information. Right now, her business is operating at a loss, so it's not as important, but it's still important because she does not know how much physical inventory she has on hand. So that is one of the big things. And when I start working with a new client who has physical inventory, that's one of my first questions is, how much physical inventory do you have on hand? And they're like, oh, I don't know. They're like, do I have to count it? I'm like, yes, you
yeah,
have
yeah,
to count it. Like,
yeah.
you should be counting this at the end of December every single year at a minimum.
Yeah, and in that, I totally agree with what you're saying actually, because you're not really saying like you must know somebody that sells this type of product, but you must know somebody that handles the industry, or I'm sorry, the inventory is what I meant to say. So it's not really an industry of this type of product, but it's handling inventory. And you're correct, because people don't understand, and the inventory follows to the tax return. You have to report how much inventory you have. So that makes complete sense. And, going back to what you were saying about operating at a net loss, the scary part is this client, as well as many, and even though both of us have tried severely to change the opinion, doesn't know what her cost of goods are to know if she's really making a profit on her sales, which the financials suggest they're not. So that's where that is so, so important. So where I want to go now with this is that I'm going to just say it this way and let you take it from here wherever you go with it.
Mhm.
And once again, your opinion can change. Please note this is my opinion. I tell clients that are maybe just starting out or they have a few transactions, they're just doing a few things, they're building it up. It's almost like a little company that they're starting with, that maybe signing up and getting QuickBooks isn't the best solution. Using a spreadsheet that they can see and feel, it's not dynamic, it's static, it's right there in their face. It's not like entering data and it pops out a report they don't know. They can own it, they can control it, they can understand it. It doesn't cost them any money. So I am going away from the marketing of QuickBooks to say, oh, you're starting a company, you need to get a QuickBooks and at least get the entrepreneur version or whatever they have that. Sometimes a good old fashioned spreadsheet is a better choice. That's my opinion. You give me your opinion on that.
I have a very similar opinion, but I want to go right back to something you just said.
Okay.
If you start with QuickBooks, never get QuickBooks self-employed.
Okay, good. I
Never.
don't know anything about that. So tell us why, because I am hearing a lot of people want to get that and I know nothing of it. Please do tell.
So people want to get it because it's so much cheaper than the other versions of QuickBooks. The biggest issue that we have with this is, so when you need to upgrade from QuickBooks Self-Employed to QuickBooks Online, you can't. You
Oh,
literally have to take everything that's there and completely redo it in QuickBooks Online. You cannot just transfer from one to the other. And QuickBooks Self-Employed, you're better off using a spreadsheet anyway, because it's not the same. It's only, I'm trying to think, because I just had someone have me do a review of theirs. It literally just does your expenses and your revenue. You don't have a balance sheet in self-employed.
I thought that was true because the reason I know this is I also look at financials to help people get prepared for banking, right? For a bank
Mm-hmm.
situation. And they couldn't run a balance sheet. And so
Right.
I had to custom create the old hand,
Yep.
calculation,
Yep.
a balance sheet because they did not have one and the bank needed a balance sheet.
Yes.
And when I realized the self-employed, which I know we're going outside of the QuickBooks arena, but and correct me if I'm wrong, and you may or may not know, I don't think FreshBooks does either. My feelings on FreshBooks, and Clarissa, correct me if I'm wrong on this, but my experience with it is like, yeah, if you want to use it for keeping time, it's great for that, but used in a spreadsheet, it's not a good, robust accounting system, or at least it wasn't when I looked at it a couple years ago. I might be passed on my information here. I'm not saying I cornered the market on all the software. I don't check into it, but I don't think it's a very good solution. It doesn't seem to do anything real well. It does a little bit kind of bad and nothing real well. Your opinion?
I am of the same opinion. I have not used FreshBooks in a very long time because I was like it doesn't do what you need it to do. And when I had used it before, if you made revenue where it was not an invoice directly from FreshBooks, it wouldn't even recognize that revenue.
Ah,
So I was like, no, I'm not recommending FreshBooks at all. I don't know if they've changed since then, but it's not something I will recommend. So I
okay.
only do spreadsheets, QuickBooks, and Zero.
While we're on it, let's go into Zero. And I was sharing before the show, which I shared with you before I did it, that I last year switched over to Zero from
Mhm.
QuickBooks. QuickBooks was annoying me. And my relationship with Zero turned out to be really good. I really liked it. One of the things I liked about it is I found out I could turn off this, I can't even remember it. You'll probably know what I'm talking about, but it made it more of a robust accounting system. So me being the CFO used to um Sage and Peachtree and the real accounting systems, I relate to it really well. I love it.
Mhm.
It looks like it's supposed to look to me, right? But I know it can also possibly be daunting to other people. So my answer and my experience really isn't the right answer because it's coming from my knowledge and what I like to see. So I feel comfortable like Zero is a good accounting solution, but I don't know for the person who's doing their own accounting if it's a little bit challenging for them or not. But your opinion on it?
In my experience, yes, Xero has a bigger learning curve than QuickBooks. It is a lot cheaper, so people will go for it. So they make a lot more mistakes in Xero because there is that bigger learning curve, especially when you don't know accounting, for how to use Xero over QuickBooks. QuickBooks is a little bit more intuitive, which is why it's pushed so much in the industry, because it is so intuitive, and they are continuing to develop their AI. Whereas Xero's not developing their AI, but and it's a lot cheaper than QuickBooks. But like I said, it has a bigger learning curve, and when you don't know accounting, it's much easier to mess everything up in there.
And I could see that because I know accounting, I love it that I have those features, and I don't want any AI in my accounting. I'm
Yeah.
not against AI, I'm not a Luddite, but I still think I'm sorry, guys, I still think the human being and their brain is still superior. I know I'm
Yeah.
gonna get a lot of people, no, Lori, AI is better, but you know what? I think AI is a tool. It is not an end all. I am going to vote for humans and their intelligence. And
Yeah.
you know what I found over the years, being, especially in the finance world, we're constantly being told that we're going to be replaced. All the replacements are causing more mistakes where
Yes.
you actually charge more because you got to fix the mistakes, which is more expensive than doing it right the first time. Do you notice that as well?
I do. I do notice that, because people are like, I don't know what this says. And then I look at them like, yeah, you have all these negative numbers that you shouldn't have negative numbers on your financial statements unless it's something like accumulated depreciation or you've overpaid on something. But yeah, it's annoying, and I understand why we want AI because it makes everything easier, but in the long run, when it comes to your accounting, AI is not making it easier.
When I'm old, right? So when the Macintosh first came into play, I was in that era, and I made up this statement then, don't engage in technology just for technology's sake, just to say the technology did it. Make it a
Mhm.
tool. Don't use a hammer if you need to use a screwdriver, okay? Just to say I
Yep.
used a hammer. That would be ridiculous. Me saying that sounds stupid, right? But we go, I use this new cool technology. Well, is it working better? No, but I use this cool technology. So, use the old brain and think, it really does pay off. It's hilarious because just as I'm about to ask a question, I get it in my head, you actually start answering it right before I'm ready to ask it. And it happened again because what I was going to say to you, and you're going to see where this is going, I'm going to go, okay, I have my file. I'm either having somebody do the bookkeeping or not, and I go to send it to my CPA or the bank. I don't know what I'm looking at, but can I pull up my balance sheet and at least look for something? And I was just going to ask it, and you just partially mentioned it. So let's talk about how even someone who doesn't understand accounting can pull up the reports and what they can at least look for, not know exactly what's wrong, but be suspecting something might be incorrect.
So the first thing is going to be negative numbers. You very rarely should see negative numbers on your balance sheet or your income statement, unless it is something, like I mentioned, accumulated depreciation, possibly refunds, or if you overpaid on something. Another big thing to look at would be the balances in your bank account and your credit cards and loans. Are those balances very similar or exact to what you owe right now? I will say that if you're not up to date on your bookkeeping, then they're not going to be exact. However, if you are up to date and you run a report, so today is June 19th, so you run a report now, it's going to be through May 31st. So that's why it's going to be close. However, say you have a $500 credit card balance right now, but in QuickBooks, your credit card balance is $5,000. You know that that's way off. So you have something wrong, and you need to find what the issue is and fix that. Most of the time for that issue, it is probably because you are not matching your payments. So I don't think we really have time to go through the matching your payments right now, but there are past shows where we have gone over this.
Yeah.
with matching your payments in QuickBooks to your credit cards.
Because what ends up happening is you double dip, so to speak. You have it taken out in 2 days. Oh, there's the cute little new puppy. You
Yep,
you you have
she
it
just
where
woke up.
yeah, you have it where it's being taken out twice. And so the credit card transactions seem to mess up a lot of people in QuickBooks. I see that quite a lot. On the balance sheet, and I don't know whether you're seeing this, but what happens is when people are either upgrading into QuickBooks or entering data in QuickBooks, in other words, another way of me saying this is they didn't start the QuickBooks file on the same date they started the company. You look
Mhm.
at the balance sheet, and I forget the words QuickBooks use. I think they also use opening equity or shareholder equity, one of those terms, and it's negative. And I explain to people, you cannot open a company with negative dollars. You cannot open a bank account with negative dollars. So I know whoever started that file didn't go back to the tax returns, didn't go back to the original data, didn't put it in properly. They just started, I think what they started, you know more because you're the expert on the technology. I think they just started syncing the bank account without putting any original entry of data. I'm
Yeah.
assuming that's what they did because in Zero, I had to catch it all up. And that is a clue in to the banks. When they see that, they don't trust any of the data. You want to talk a little bit more in detail? Oh, what a cute little puppy you got there. Do you want to talk a little bit more about it? She was just telling us before the show, guys, that what's your baby's name?
Her name is Emma.
Emma, that she found out just recently that Emma's deaf and partially blind.
Yeah.
Yeah.
Yep.
Oh, so cute. And Emma's what, months
8
old?
months.
A little bit over 8 months. How cute. Oh, beautiful colors, beautiful colors. We're a friend of animals on this show. We love animals. It brings us
Yeah.
some happiness. So talk about this. Are you seeing this with negative numbers as well? And it's a concern for me from being a banker. What do you find on that?
So sometimes, yes, I will find negative owners or opening balance equity.
That's the word.
And most of the time, if it's negative opening balance equity, it is related to the credit card where
Oh.
um stuff was brought in, but your opening balance was not set. So that's what I found with opening balance equity. For the bank account, it doesn't matter as much because it still won't go negative. For opening balance equity with the bank account, only the credit cards.
Gotcha. See, I didn't even know that was that. Like I said, I know just enough to be dangerous, as I always say, because I know it from the CFO world and enough of accounting to be dangerous. But you're seeing it day in, day out. You are
Yeah.
the expert on what is actually going on with this technology. I just can sound good. You got the
Mhm.
details behind it. And I really do believe, especially when your company grows, you should look at hiring somebody that knows what they're doing. That is one of the best investments that you can do. There's certain places to save money, and I always tell people, you might not think much about your QuickBooks file. You may not be using it for your business decisions, which you should. You be using your numbers, and looking at your numbers all the time. But at the end of the day, you should be scared that you could be reporting things wrong to the IRS. If anything should cause you to have some alarm, is realizing these numbers go directly to the IRS. That changes the dynamics.
Yes, exactly. And even if you do have someone else file your tax returns, you're still the one that's responsible at the end of the day, no matter what happened. Because in all of the audits that I've done, we only go back to the business owner. We weren't going to the accountant that filed the returns.
Right.
And
Yep, exactly. Hey, and I wanted to ask you something else. This has to do with sales tax. Okay. I
uh-huh,
think if I remember correctly, you've got a lot of experience in auditing of sales tax, right? That was one of the things you did with the government. I'm going to ask you to mention a little bit what economic nexus is so people understand what we're talking about. And then I wanted to ask you because economic nexus, as you know, has made collection of sales tax more complicated. And people who use, and I'm going to say a whole lot of things and let you take this off. I am having day in, day out, Clarissa, people who use Shopify click the little button thinking that they're handling it, but all they're doing is invoicing and then collecting it. So they're actually engaging in fraud because they're collecting it without a seller's license and keeping it in their bank account with no knowledge of that whatsoever. So I want you to
Yes.
comment on that. And then I want to ask your opinion if you have had any experience with either, I might be saying it incorrectly, but Shopify's Avalara or TaxJar, because I'm getting asked questions. Can you trust these companies? Are there other companies that do it for you? I have never had anybody use them. And so I checked online. There was some good and bad reviews. I would love to get your input on who you can trust to do this on your behalf, because it is complicated. I just said a mouthful. Just take it
Mhm.
away from there.
Yep. So yes, I have worked with Avalara. I've not worked with TaxJar.
Okay.
I do believe Avalara will do it mostly correctly, but that also depends on how well you have Shopify set up. Because
Okay.
in my experience, you have to go through and put the correct tax amount in for each state in Shopify. And if you're putting a tax amount in for a state that you're not responsible for collecting, then this is where it comes back to the fraud. You're collecting tax from a state where you shouldn't be collecting it because you have not crossed that nexus amount yet.
Threshold. The threshold is what you
Yes.
I wondered how
Or
it was calculating thresholds.
for the majority of the states, the threshold is $100,000 and or 200 transactions. Some are and, some are or. This
Yeah.
is where TaxJar, I believe it's TaxJar, will help you. Avalara does too, but they will help you know if you have crossed that threshold. What I have done for some of my clients is I actually create a spreadsheet to keep track of it every month to know if we have crossed the threshold in those states, in any state. There are some states where yes, it is lower than $100,000, and then like I said, there it is an or for $100,000 or 200 transactions, and that is into that specific state for sales that you've made. So you're based in California and you sell products that are taxable. And the other thing is, not all products are taxable the same way in every state. So
Or
this,
services, yeah. And
yeah,
California has, I think, three transactions, and you got to start charging sales tax if you're not a resident.
right. So like this is where you need to find someone who can help you do this research to find out if you need to do sales tax collection and start registering for a sales tax license. If you sell digital products, this is something I have personally done research on. As of right now, digital products are taxable in 34 states. They are not taxable in the other 16 states. 5 of them have 0% sales tax. So there is that part. So it all depends on what you're selling and how much you sell into other states. So this is where selling across state lines can be a deterrent for making sure you're filing the right things, because sales tax has nothing to do with the IRS.
Right.
The IRS will not do anything about your sales tax, but the states will. And if the state finds out that you're not reporting the correct sales tax to them, they will come after you. And then you as the business owner are responsible for paying the sales tax out of pocket because you didn't collect it from your clients. And that's
Yes.
just how sales tax works.
Yes, and this is huge, guys, and thank you, because I actually teach a webinar on should you be charging sales tax to your customers. And so as a backup, guys, in I might have the dates wrong, but I think it's 2018 is when economic nexus
19.
came 2019, 2018. I was going to say 2018, 2019, somewhere down there. And it was South Dakota versus Wayfair was the Supreme Court ruling. And what it did is instead of it just being if you are nexus physically located in the state, they said if there is an economic advantage. So this allows each state to tell a seller, if you are selling in my state, you may have to collect sales tax on products, on services, on both. And after you sell a certain quantity, you need to start collecting. So it made it a very complicated situation. I respect it because the states are just wanting to keep their sales tax coffers filled once online sales came into play, right? So I get it. But for the seller, it's extremely complicated. And I am seeing a lot of people not understand this, and they're making mistakes, and they're either collecting without a seller's permit, keeping it in their bank account, not collecting it, not understanding the right amounts. So if you guys are doing any sales tax and you have no clue what we just talked about, reach out to me. Let's talk about this, because this ends up, you did auditing, they will go after you.
Yep.
They're missing money. They will go after you. And it is extremely complicated. And I know that what Shopify does is it claims that it's putting the right numbers in, but it's not doing a daily research to see what those are. And not
Right.
only do sales tax amounts change, but the states that are now choosing economic nexus are coming online. Now, my understanding, and there could be more, but I know Amazon does it on your behalf, Etsy does it on your behalf. If you're selling on those two platforms, I know those two, you're safe. That's good. But the minute you get into Shopify, you're on your own. You need to get a third party. And Clarissa, I love what you said about doing the old fashioned way, which is what we used to do, is we had a spreadsheet to see what zip codes and I was wondering that. I thought it seemed to me like you still have to do that, because otherwise there's no way, and you'd have no record if you get
Yes.
audited. So
Yeah.
the end result of this, guys, is sales tax is a complicated animal, more so than you may realize. And just Google economic nexus if you're not sure. Sadie put economic nexus in the chat. It will bring up a lot of information, and you'll get a feel for what we're talking about. But beware if you're using Shopify, because I can't tell you how many people that the web designers are setting them up on Shopify. They don't even know it, and then they think they're fine, and they're not. So those are huge. So
Yeah.
Clarissa, once again, we could talk forever, but what I want to spend the last minute with you just telling the audience, how to get in touch with you. Sadie's got the information, what you do for clients. And I do know, because we talked last time, that you have gotten very busy, but you're brought on additional staff. So you are able to take on more clients now. So it doesn't surprise me in the least that your business is growing, because you're one of the few people can trust. Oh, Emma, I'm a client of Clarissa. She's awesome. Yes. Hello,
Yes.
Emma. Yeah, I remember that you are. In fact, I know a couple people after watching you on the show had hired you. And I just feel that having your financials is so important, and having the correct reports to the IRS is so important. I appreciate having somebody I trust come on the show that I represent. So last comments, last thoughts for the audience, and anything you want to leave the audience with about you or getting in touch with you or your courses, anything. Clarissa, you got the stage.
Okay. There's two questions that I saw come through that we didn't get a chance to answer.
Okay.
Diana asked about payroll outside of QuickBooks. Please do not use QuickBooks for payroll.
I was
We
going to
can't
say
get
that.
into
I
that
forgot
right
to
now,
bring
but
that up.
do
Please
not
do
use
not.
QuickBooks for payroll. My recommended ones are Gusto and ADP. For payroll, we don't really have time to get more in depth into that question, but please don't use QuickBooks for payroll. They will mess more things up than they will your bookkeeping.
I can second that, because I can tell you about a client that now has a lien on his house because QuickBooks did not remit the right taxes, and they are now in trouble. So I can confirm what she's saying is true. So
Yeah.
yes, thank you for bringing that up. I didn't see that question in the chat.
And then Charisse asked, what about import items? I would assume it would be taxed according to your state, your business is formed. That is not true, Charisse. So when you buy something as a business, you in your state, you should have an exemption certificate, and you should not be paying tax on physical items that you are buying to resell. So you need to make sure that you're not paying tax. You should be charging tax when you sell it, but not paying it when you buy it. So
Perfect.
that's a sales tax thing that you would actually need to sit down with someone to go through your records and make sure it's correct there. And then a final point. So yes, the biggest thing is make sure you're using your financial statements to make more decisions in your business. Because if those financial statements aren't accurate, you're not making the right decisions in your business. So I mentioned two of my clients, how they have mistakes. So the cost of goods sold is not calculated for one. So she's not able to make the right decisions based on what she needs in her business. The other one, she hired QuickBooks Live to do her bookkeeping and now has $34,000 of property and equipment that doesn't exist on her tax return. So when you hire the right people and you can actually look at these financial statements and know what's actually happening in your business, then you can make better financial decisions in your business.
Yeah, beautiful. And so I really say, check out your website. You got a lot of tools, you got information. Of course, I'm going to have you back on again. That's always a given. And maybe we'll talk a little bit more about sales tax and using the numbers. We'll get into, there's always so much to talk about. I never, have enough time to talk about all the important topics. So, and I want to do a quick shout out to Virginia. I noticed your question in there. Please do, and I'll put it in again, please do contact me because if we're setting up the franchise tax board, I'm not sure where you're needing the tax return. So it's telling me that more is going on than I'm understanding in the question. So this really, all respect, needs a one-on-one so I can address this and we can talk about your specific situation. I want to make sure that we address it. So I'm going to put that in again, my contact information. We can set up an appointment and go over your specific situation. So I wanted to make sure I had a shout out on that. Also, Sadie's going to stay on a little bit after Clarissa and I shut off here in a second. And that way you got time to put information in the chat, get the information from the chat and talk amongst yourself and get Clarissa's information. So I just want to say thank you so much. You're just such a wealth of information. And, I can tell everybody that after you hear Clarissa and I talk, and then you have a conversation with your bookkeeper, you'll notice the level of conversation that you're having, the level of dialogue, the level of knowledge. You should be able to talk with your bookkeeper and they be able to talk to the depth that we are. They should have this understanding. They should be watching your back. They should understand this stuff. And if they're not, find somebody new. Don't become married to, I see that all the time. People come married to their bookkeeper and they won't leave them even though they're wrong. I tell people all the time, you'll dump a spouse in a second, but you won't leave a bookkeeper that's got things wrong. You won't shut down a business that you're not making money on. I don't get it. I don't get it.
Because we don't talk about money.
You know what? You're probably right. We talk about love and no love, but we don't talk about money. That's brilliant. That is brilliant. I'm going to have to think about that. I'm going to start using that. We don't talk about money. You're right. You're so right. Okay. Well, thank you so much for coming on the show. You are always available when I ask you. I'll be bugging you in a couple months to come back in, but you are just such a, look at, we got more questions. I can't even get to them all, guys. So basically, we're going to get Clarissa back on. I'll get you on in a couple of months, and everybody keep your questions. They're coming back on. But in the meantime, you know how to find her. Sadie's got the information in the chat. You reach out to this person because she knows what the hell she's talking about, and a lot of people don't. How is that for an endorsement, right?
Good,
But
thank
you know what? It's true. And like I said, I think when you're coming to finance, when you're talking about IRS, you don't play around with this. These are snakes that bite. You don't play with these, right? We don't play with the cute little snakes because they bite. Okay, guys, thank you so much for the frequent flyers that are here every single week. I sure do appreciate you. And if you're new to the show, you can get a wealth of information on this show. Please tune in next week to Small Biz Talk with your host, Lori Williams. Thank you again. Sadie will stay behind. Get your contact information and anything you need. Please reach out to us. Everybody have a great rest of the day, and I will see you next week. Bye-bye, everybody.
Bye.
Bye.